It was hardly surprising that the Reserve Bank chose to keep interest rates where they were for the first time in 3 months. But in making that decision, the RBA isn't giving much away about where to next. While the domestic economy appears to be holding up quite well, new concerns have emerged from offshore. Here's Philip Lasker.
After 2 rate cuts in a row, RBA Governor Glenn Stevens and his board decided to hold off.
I think that the RBA is probably feeling as though they're a little bit ahead of the curve at the moment, having gotten interest rates down over the last 2 months by 75 basis points, so they could easily afford to sit still this month.
Hence the RBA's comment that there has been a material easing in interest rates.
It's got the luxury now of waiting to see what the incoming news is.
And today's incoming news was a massive 27% increase in building approvals during July, pointing to a rush of first home buyers taking advantage of incentives soon to expire and the effectiveness of previous cuts in interest rates. But the housing lobby still wants lower rates.
Because we have had 12 months of downtrend in every indicator, you've got finance coming off, you've got land sales at less than 50% of what they were a year ago. Every indicator is suggesting that activity is heading down.
The Reserve Bank gave no indication of where it was headed with interest rates, but most analysts think more cuts are on the way, triggered by the jobs market.
If that starts to weaken against a backdrop of global slowdown, then I think the Reserve Bank will cut rates again.
And there was good reason to worry about a global slowdown as America's manufacturing sector contracted for the first time in 3 years.
Manufacturing is often the canary down the coal mine, and our view is the big risk looking into next year is that we're going to get tighter fiscal policy in the US. We've had tighter fiscal policy in Europe and the UK. They're both in recession. And we've got lacklustre growth in Asia.
Morgan Stanley's Gerard Minack sees this as a broader and deeper global growth scare than in earlier years because of the risk of a coordinated slowdown. But not everyone agrees.
We expect the emerging economies to continue to drive growth, and indeed for China, we still have in mind that Chinese growth will pick up in the second half of this year. So that should probably be enough to keep the world ticking along.
The RBA will do the only thing it can: watch and wait.